With that being said, let's hop in and let's look at the economy. And I did this infographic. My website on my Instagram page is Dr. Boyce Finance. And so I put together kind of a short little video clip to Marvin Gaye music of all things, or no, sorry, not Marvin Gaye, it's Isaac Hayes music, and it's just kind of like some indicators of what's going on with the economy. And I'm gonna play this, and then I might pause it periodically. Let me know. Well, I would say let me know if you can hear it, but it's just imagine Isaac Hayes music. That's you know that song, Walk On By. If you see me walking down the street and I start to cry each time we meet. That song, right? That's such a sad song. They played it in that movie Dead Presidents. Anybody else see that movie? All right, anyway, so here are some signs that the economy is slowing down and having problems, and I'm going to talk you through what's happening, and it'll be a great economic lesson as well. So here it goes. I introducing the one and only Isaac Hayes. Okay, first one. Let's pause. I'm gonna pause it as we go through. First one, stocks are up, but not everybody's feeling rich. Big gains in tech and AI stocks through the roof. However, everyday costs are getting higher, and only some people get the benefits. This it relates to something we've talked about in class before called asset inflation. Asset inflation is kind of like regular inflation, except it applies to assets. Surprise, right? And what that means is that when you have inflation and the prices of everything goes up, there are some people that benefit, have a net benefit from inflation, some who have a net cost. So the net benefit people are the ones who are, say, in the stock market or who maybe have taken the time to own real estate because when the prices of stocks go up, they're making money. When the price of real estate goes up, they're making money. The people that struggle are the people that are workers getting a flat wage, but the cost of everything's going up. So you're not getting so think about it. Imagine the inflation is like water in the ocean. If the water gets taller and higher and you get taller, then that's okay, right? You know, the water went up by 6 inches, you grew by a foot, you're not worried about that. But if you stay the same height or get shorter and the water's getting taller, then eventually it's hard, right? Drowning is a possibility. So I don't want anybody drowning. So there you go. That's so this is why I'm a big evangelist on the idea of owning stock, because the stock market is the number one wealth driver in America. When people say I want money, I'm looking for money, and you say, well, do you know about the stock market? And they say I don't know anything about it. Then you can literally say to them, you're not looking for money because that's where the money is, right? Like if I'm looking for strippers, I go to the strip club. If I'm looking for vegetables, I go to the farmer's market. If I'm looking for roller skates, I go to the skating rink. Well, if you're looking for money, you go to the stock market because that is literally the epicenter of American capitalism. That's where the money resides. It doesn't reside at your job. Like your job fuels the stock market, but the stock market fuels your bank account. So anyway, moving on. Let's keep going. Here's another one. Interest rates are still quietly hurting people. Credit card, mortgages, or car loans are very expensive. People are buying nice cars at very high interest rates. That is a financial killer because what that does is that kills your free cash flow. The way businesses are measured, the health of a business, one of the key factors in measuring the health of a business is something called free cash flow. So if your bills are here, if your income's here and your bills are here, then your free cash flow is minimized, which means your financial health and your liquidity is minimized. And the Fed isn't rushing to cut interest rates. They feel like everything's okay, and they're and so waiting for interest rates to fall is a pretty costly strategy. A lot of people have very high interest credit cards, things like that. Let's keep going.